A very good afternoon to all. Hello friends, this is C. Sangam Agrawal and I welcome you all again on with another topic. So friends, today we are going to discuss a very unique topic. Might be such topic was not discussed at any other platform as far as my knowledge. So friends, for this lovely evening, weather is quite good and we are going to discuss about the basically fire insurance. You might be surprised to see that why fire insurance, why we're talking about fire insurance. So friends, sometimes the coverage, adequacy of coverage, and second part is the claim management. Two things are very much important in claim. Whenever any person face any kind of claim, then these two things bother a person too much. Friends, I work with one of the insurance company in my initial year of my chartered accountancy, and somehow I can understand and link the insurance and understand the insurance very closely. Somehow insurance is close to my heart, and so and recently I have faced one of the claim. I have managed. I managed that I helped one of the client in the claim management. Then I come to understand that it is a in itself a one of the area of practice. So if we develop our practice in claim management, insurance advisory, so somehow it become a good area of professional practice. So to understand in a detail and in a depth, today we have Mr. Shahid Ali with us, who is an expert in this field. So friends, firstly, I will introduce Mr. Shahid Ali. Although he has a very much and depth experience in this field, Mr. Shahid Ali is a principal officer come CEO of the company name Green Life Insurance Broking Limited. He is one of the leading online and offline insurance distribution network and insurance professional with 14 years of experience in both India and overseas marketplace. So he has experience more than 14 years in this field. At this company at GIBL since November 2017, he is responsible for entire insurance business function, regulatory compliance, and corporate sales. Shahid holds a post-graduation diploma in the business management from MIT Greater Noida and a BSc honors degree in the physics and from the Meghdad University, Bihar. He is a qualified insurance broker and pursuing fellowship from Insurance Institute of India, Mumbai. He began his insurance career as a corporate risk solution specialist in Tata AIG Delhi in 2006. Following this, he served senior business position role in various insurance broking houses like EF, SMC, Reliance Composite, Trans Asia Composite. He has been served Wheels International in the Australia's region and got experience in the placing insurance and reinsurance business in Singapore and London market. Shahid is well equipped and immense exposure in consulting, underwriting operations, client servicing, specialized in insurance portfolio analysis, risk management, and insurance claim management. He has quality experience in handling global and large corporate clients spanning aviation, petroleum, construction, shipping, IT, manufacturing, engineer, telecom, power, trading, and service sector. So friends, might be you understand that he has experience and exposure of all kind of industry to serving them as in consultant to providing their insurance need. So friends, I will not take your much time as I already introduced our learner speaker today. Before going to Shahid we have also will have CA J.K. Chaudhary ji, who has a very good exposure with corporate taxation, corporate law, company laws, and other matters. He has a more than 40 years of experience in a listed company. So before going on this matter, I request J.K. Chaudhary ji to share his word of wisdom. Thereafter, we will start our today's session. Over to you, Chaudhary ji.
Thank you, Sangam. The insurance is a new and upcoming field. Insurance coverage in India is much less than what it should be. And I think it is a very big area for practice for chartered accountants. So this is a new subject. Most of the chartered accountants don't venture into this, but this is a very important area. And now every business needs the insurance. So I think it will be a very good session today. So I'll request Shahid to continue.
Okay.
Shahid?
Thank you, Chaudhary Saab. Thank you, Sangam. Thanks for giving me opportunity to address such a light enterprise intellect section of the community. So I'm honored to doing this session. Uh, I start this session with the points that Mr. Chaudhary has raised. Uh, in India, the penetration of insurance is just 0.7% of GDP, while most developed country has close to 3% of GDP. So you can see what the quantum of growth is available there in Indian market is almost 5 times. So penetration is very low in India. So there is abundance opportunity in insurance. So if we work together, then we can enhance our ability to penetrate in the market in a professional manner, so that we can achieve a level where standard market is working now. So now I would like to start my session with fire insurance. Fire insurance, I think most of people have aware of fire insurance, but what here I will discuss the all the rule regulations and covering parts how some insured is selected, because in claims selection of some insured is very important. So while going through my presentation, anybody can discuss and raise a point, so that we can make session interactive. So what we'll cover in our session is basically is a 8 section in fire insurance tariff. So I will go one by one, but not in details, but in that details that it is very relevant to your scope of work in insurance in insurance sector. First one is section 1 is general rules and regulation of insurance. Section 2 is standard fire and special peril policies. What are all the policies covered under fire insurance? Section 3 is basically for non-industrial units. Section 4 is basically industrial units and manufacturing units. Section 5 is for outside compound utilities outside the compound. Section 6 is basically storage risks outside the compound. Section 7 is basically there are different kind of it is called tank farm gas holder located outside the compound. And section 8 is add-on covers what is there available in the fire insurance. So first you need to know under section 1 general rules and regulation what are kind of policies they are available in the fire insurance. One is valued policy. Valued policy is basically where there is no any a commercial utilization is available of those products, but it is valuation is basically increased day by day once it's getting old, like couriers, manuscripts, art and drawing of a famous person. So these are kinds of basically and vintage car also. So these are basically commodities where value is increased day by day once it is getting old. So in that kind of product, insurance company insure it on a valued basis. You can say here example, the famous world picture of Mona Lisa would have covered under valued policy. There is a valuable in the market. Valuer assess the value of that manuscripts or art of work, and then those values are agreed by the insurance company, and then it is covered at that value. Second is long-term policies. Long-term policies basically available in dwellings. Only dwellings means property for residential purpose only. Dwelling is called basically property for residential purpose, like home or any apartment or any such kind of property which is used as a residential only. So you can insure it for dwellings from 1 year to 10 years. It would basically normally general insurance policy period is 1 year, but for dwellings it can be insured up to 10 years. Now it's floater policy. Floater policy is basically relevant for the stock only. If there is multiple locations and no specific location is is allowed to have a specific sum insured, then in that case, insured can ask for the floater policy. In that case, all the location under the policy can be covered under the single sum insured. So it is specifically benefit the insured to not counting each and every locations as a value of sum insured. So only single sum insured can be floated across the all locations. Only insurance company will charge 10% extra for that kind of policy. Uh, Fourth is declaration policy. Declaration is policy also for stock only, where when the fluctuation of stock uh, uh, varied time to time. Is certain months is fluctuate like anything is more than double. Certain months there is a slowdown of the due to season due to a physical reason. The stock is minimal. In that case, declaration policy is basically advisable. In that case, insured need to have declare each and every month the sum insured available present at the stock location, and at the end of the month, end of the year, the average declaration is counted. If your initial amount of declaration is greater than your final declaration, then extra premium will be charged, and if it is lower than your initial sum insured, then you will get the reversal of the extra sum insured on pro rata basis. Uh, Fifth type policy is floater declaration. If there is multiple location and also there is a abundance fluctuation of sum insured across the year, there is a different month, there would be a different kind of exposure in stocks, then these policies will benefit for those kind of fluctuation of stocks. So it will basically combination of floater and declaration policy. Cancellation is the same. You can aware of anybody can cancel the policy. So it should be reason well and accepted by the insurance company. So if a insurer is cancel the policy, then it will be refunded on a pro rata basis. But if insured is cancel the policy, then a refund will be on the short period basis. Short period basis is nothing, but there is a table according to that insurance company charge is a basically you can say is a kind of penalty. Say example, after 9 months, if if any client wants to cancel their policy, then there will be no any refund. So basically, it's a kind of penalty only.
Shaiji, is there no any field cup period like in term insurance? We have a 30 days period in which we can cancel the policy.
If it is cancelled within 15 days.
Okay.
If it is cancelled within 15 days, then entire amount is refunded.
Based upon the pro rata.
No, yeah, pro rata basis.
Pro rata basis. Okay.
Yeah.
Sati, my another question is that generally what do in insurance company, they charge the complete amount of GST in case we cancel the policy within 15 days, and they charge the complete amount of stamp duty also. Is it correct way, or is something insurance company doing the malpractice?
No, insurance company need to adjust the GST only, and because in GST now it is available to have a negative credit in the GST portal. You can make return as well. You are CA, you can better know that now everybody is basically can do a negative credit of GST. So insurance company can do in that way.
Okay.
Earlier that facility was not available in GST portal. That's why insurance company was denying.
Okay. Because I saw in my personal experience also, insurance company told that the product premium will be deducted, and the stamp duty value with whatever we have paid, that will also deducted, and the GST amount is also deducted, and somehow all these three figures become a handsome amount. So that people think that let's don't surrender the policy and let's continue it.
Absolutely. Earlier it was this difficulty. Now GST portal has removed that difficulty.
Okay.
So now insurance company can refund GST as well.
Okay. Thank you. Move next. Shahid, you can move forward.
Yeah, okay.
Yeah.
The next is I will go forward to section 2. What are the perils covered under the under the fire policy? There are basically 12 perils: fire, any kind of fire which is covered under the fire policy; lightning, explosion or implosion, any kind of explosion or implosion; aircraft damage means falling of aircraft. If some aircraft fall on any insured premise, then those damages are also covered under the fire policy. Right strikes, malicious damage. Malicious damage means a group of people maliciously damage the property, then that is also covered under the fire policy. All kind of storm, typhoon, flood, inundation, we call it catastrophic losses. It is basically not specific to the one location; it's specific to the entire region, entire territory. So this is catastrophic perils: the storm, typhoon, flood, and inundation. Impact damage. Impact damage means any kind of outside impact damage. If a rail wagon has encroached into the insured property, or any highway truck running on a highway encroached into the insured property, then those are the kind of impact damage. Even herd of elephant barge into the insured property, then those kind of impact damage are covered under the fire policy. But if insured own vehicle, own crane, or own any kind of vehicle impacted and damage the property, it is not covered. It is exclusively under the fire insurance. But you can giving by extra premium, you can add on those impact damage. Next is subsidence, landslide, and rock slide. All kind of the subsidence, landslide and rock slide. It is basically happen in the area where rocky area or hilly area. You can find those of losses. Busting or overflowing of water tanks and pipes. Missile testing operation done by government. Leakage from automatic sprinkler installation. Those damages also covered. And bushfire. Bushfire, there is a difference between bushfire and forest fire. Bushfire is what? Inside the premise, there is a vegetative plant there inside the premise of factory, and those vegetative plantation caught fire, and by those fire property faces losses, damages, then those fire is covered. But if a property is inside a forest, and due to forest fire, fire did damage to the property, then those losses are not covered. Those are the exclusion under the fire policy. You need to if you need to have cover those fire also, then you need to pay extra premium, and you need to pass endorsement under the policy. So these are the coverages. But here to tell you, let me go back to again the perils. There are 12 perils. Go to perils number 6. Perils number 6 is basically catastrophic perils. We can call it cat perils. So nowadays there is a you can find the fire rating. So fire rating is basically rating for all the perils except the 6th one. For 6th one, you need to pay extra premium. We call it cat perils. So there is a STFI perils, basically storm tempest inundation perils, we call it in a layman language. STFI perils, there is separate rate IRDA has devised for this. So you need to pay a separate premium for STFI. So if you remove from 6, we call all the other perils as a flexa perils, and 6 called as a cat perils. So in 12 fire perils, we divide it in a 2 ways. One is flexa perils, and second is cat perils. Flexa is perils from 1 to 12 except point number 6, and cat perils is point number 6, because due to differentiated of rating devised by the IRDA. So where it is important to know the what are the exclusion. Exclusion means it is predominantly excluded in the fire from the fire policy. But if you want to have covered those exclusion, you can yeah, make a request to the insurance company. They can cover those exclusion by charging extra premium. Like in fire exclusion of burning property insured by order of public authority. If it is by public authority by government, then it will be excluded. You cannot even you cannot take this as a add-on cover also. Excluded of its own fermentation, natural heating, or spontaneous combination. These are excluded, but it can be included by paying extra premium by the consent of insurance company. Under explosion, apparatus and boilers damages by centrifugal force is excluded. Reason being, if there is a separate insurance, you need to buy for boiler as per the law. So, uh, centrifugal by centrifugal force, if there is any loss due to boiler or any pressure apparatus, that explosion and explosion is excluded. Loss pressure wave is not experienced in India, so it's not important here. In RSMD, basically, uh, total or partial session of work is not covered, but damage is, due to RSMD is covered. And also, burglary is not covered. Burglary, theft, larceny is not covered. That's why you need to buy burglary as a separate insurance. And see here in ST5, excluding those resulting from earthquake. Earthquake is also not covered. So that's why you need to pay extra additional premium to cover earthquake. So here you can find an impact damage. Insured own vehicle is not covered as impact damage, but it can be covered by paying additional premium by the consent of insurer. Leakage from automatic and sprinkler excluded repairs. Repairs and removal alteration is not covered, but direct damage is covered. Basically, in fire insurance, consequential loss is not covered. So any kind of you find any consequential losses, then it's not covered. If a direct damage to the insured perils, then it is covered. And in bushfire, you can see here excluded damage caused by forest fire. Forest fire, if you want to cover, you need to buy this by paying extra premium. Another excess is policy excess. Policy excess basically in Indian market it is regulated. So as a different level of sum insured, there is a different kind of excess. We need to follow that policy excess. It is standard excess. Every insured has to abide by those excess. War and violence. These are the standard excess. You can find it any of the insurance policy, whether it is motor insurance or any kind of insurance. You can find those are like war like perils, nuclear damage, consequential loss. Consequential loss is exclusion, but consequential loss you can buy as an additional policy. It's not add-on cover, but it's a separate policy altogether. Section 3 is basically regulations for all the non-industrial units. We call it commercial units, like dwellings, hotel, offices, schools, shops. So there are different rating pattern for non-industrial, and there are different rating pattern for industrial units. So earthquake and ST5 also there is a different rate for section 3 section 3 occupancies like hotel, dwelling, shop, and offices, and section 4 has a different STFI and earthquake rating. What are those occupancies in industrial manufacturing are engineering workshop, plastic good manufacturing, breweries, distilleries, electricals, any kind of manufacturing. Even this software development unit also come under this section. And what are the utilities outside the premise? If road is outside your premise, pipelines is outside the factory premise, sewage treatment plant is the outside the factory premise, uh, TND lines, transmission and distribution line, that actually electrical lines are if outside the premise, and but controlled by you, controlled by the insured only. Railway tracks outside the premise but controlled by the manufacturing unit only. Then these are basically separate insurance cover. They are separate insurance policy. Now come to storage risk. Storage risk has a different section. If that storage risk is outside the factory premise, if storage is inside the factory premise, rate will be applicable same to the factory. But it is not in the factory premise, outside the factory premise, then a separate rate structure is devised. And there are different kind of the storage risks, like transporter godowns. Transporter godowns where there is no specific commodities are defined. Any kind of commodities can be stored in transporter godowns. Cold storage premise, and stored premise basically categorized into 4 ways: non-hazardous, category 1 hazardous goods, category 2, category 3, and category 4. So it depend upon the hazardous substances. Category 4 is basically explosive substances comes under category 4. And for tank farm and gas holder, for these two occupancies, there are separate insurance section. There are separate policies. If there is a tank farms and gas holder is required to have insurance. What are the add-on covers? Add-on covers basically are those which are basically excluded in the fire policies, or any other kind of perils that is need to cover by the insured, depend upon the exposure or ability to have those kind of risks covered by the insured, like removal of debris in excess of 1% of claim amount. Up to 1% of claim amount, expenses of removal of debris is covered in the policy. If insured wants to cover more than 1% of claim amount, then they can opt for that. Deterioration of stock due to some internal internal characteristics of substance. Some stock are deteriorated due to power failure, accident power failure like vegetables, or something like this is called not fit to use. Then in that kind of substances, it can be covered by charging additional premium. Additional stock in cold storage premise due to change in temperature. Change in temperature also due to change in temperature also it can be covered. So there is two type of deterioration. One is due to power failure, and one is due to change in temperature. Startup expenses, if one unit is completely vanish in fire loss, then there is need to have additional expenses, which is called as starter expenses. Is not basically material damage, but the different kind of administrative expenses. Those administrative expenses called as starter expenses. That starter expenses can also be covered under the policy at, by giving additional premium. Spontaneous combustion. Some communities has basically the substance has a basically has a feature that is caught fire automatically, like this in a sugar cane unit, in a sugar unit, the hay of this sugar cane caught fire automatically. So a stock of that hay can be covered by spontaneous combustion. As Sasri Sugar Mill is basically covering these add-on cover. Mr. J.K. Chaudhary knows that. Omission to ensure addition, iteration, and expression. Omission to insure is basically a lot to 5% only. 5% of sum insured you can cover up to 5%. Earthquake is add-on cover. Impact damage due to insured on vehicles that I discussed earlier is also an add-on cover. Forest fire is add-on cover. Leakage and contamination cover. Basically, it is not under the fire policy. it can be covered by paying additional premium. Loss of rent in case of fire, if a insured need to shift the entire unit to a different location at a rented place, so those expected rents can be covered in advance under the insurance policy. In case of fire, there is expenses for architects, surveying, and consulting engineers. So 3% of claim amount is automatic cover. If insured wants to cover more amount than the 3%, then it can be covered additionally. Insurance additional expenses of rent of alternative accommodation. It is basically there is a two kind of rent, you can say. One is loss of rent and one is uh, additional expenses of rent. Loss of rent basically, if somebody is owner and who has given his property on rent, and that unit is caught fire, and after for next 6 months or 1 year it cannot be used because of the repair. So alternatively, the owner has lost the rent amount for next 6 months or 1 year whatsoever. So those 6 months or 1 year of rent can be covered in advance by the owner of the property. This is basically loss of rent. And what is alternative accommodation? If somebody is using his own property for any kind of commercial utilization of manufacturing, and fire is caught in that premise, and he has to move in a different rented location. So those extra expenses as the rent can be covered in advance in fire insurance. So they basically is it's two different cover of rent. Temporary removal of stocks is also covered by paying additional premium. And terrorism. Terrorism is also an add-on cover. It's not a automatic cover under the fire policy. You need to buy this additionally. So what is the key point in fire policy? This is very, very important for us to know while taking fire insurance. First one is full premium to be paid in advance. In fire policy, there is no installment is allowed. So full premium need to pay in advance. Second is full property to be insured. Partial insurance is not allowed at all, whether it is stock or fixed asset. All assets should be insured in full. Cannot be. We cannot choose. I can. I can. If I can insure this and I can leave this unit or this unit because it is very safe. So no insured has a choice of this. Insured has to cover all the assets under the premise. And policy is usually for 12 months. 12 months. Mid-term revision of sum insured is allowed, subject to pro rata premium being charged for the same. Silent risk. Here I would like to experience one thing. In fire policy, it is says that factories where no manufacturing storage activities are carried out constantly for 30 days, then fire policy is null and void. If somebody is running shop and they have taken insurance for 1 year, and due to COVID-19, it has happened that a shop is closed for more than 3 months, but stock is there. If stock is there, then it's not issue. But if he's remove his stock and there is no stock inside the uh, shop, and it is closed for more than 30 days, then his fire policy is null and void. He need to take additional policies for those period as a silent risk. But what as a broker fraternity, what we did, we go back to the IRDA and ask this is the extraordinary situation due to COVID-19. So please waive these condition of policies, because most of the factory has is closed down and there is no stock available in that premise. So in that case, this policy will become null and void after 30 days. And this extraordinary situation, government is taking care of this extraordinary situation. So in that case, RD agreed and waived this condition till 31st of August, until lockdown is open. Open. No, the 31st of July, until the lockdown is open. So, as a broker fraternity, this is what we effort made before the RDA, and RDA agreed, and asked all the insurance company to move this condition from the policy until 31st of July. So, this is basically success of broker fraternity during the COVID-19.
Shaji, I have a question here. As you told that if for 30 days there is a lockdown in the shop and there is no stock, in that case policy become null and void. Is in that case insurance company will refund the premium amount also?
No.
Okay, premium will not be refunded.
Policy will be null and void, but it's not cancelled.
Policy become non-revived.
Policy is not cancelled, but it will become null and void.
Okay.
So policy is not cancelled basically.
So can we restate this policy once the condition of stock and all things?
Yes. It will be automatic reinstated. Say example, in those 30 days, if there is a after completion of 30 days, if loss happen on 31st days or 35th days or 40 days, and an insurance company found that there was no stock and it was closed down for last 30 days, then they can deny the claim, referring this clause. But if a insured knows that there is a clause, then they can go to the insurance company and ask for the 1 month or 2 months or whatsoever months he wants. He can go the insurance company to cancel these policies and instead issue a silent risk policy for those property.
Okay. So Shaji, generally this kind of condition check in case of claim only. If policy normal routine.
No, it will be checked at the time of claim only.
A claim only, but in case of routine, there is no checking as such insurance.
No.
Anyone coming from insurance company time to time and
because insurance is based on utmost good faith. Insured has to declare each and every changes in their subject matter of insured.
Okay, got it.
So basically, this is the way how insurance company works.
Okay. Next point is underwriting considerations.
Yeah. Underwriting, what are the underwriting considerations there in the policy? What insurance company looks while insuring any risk? For one is nature of risk, manufacturing, storage, or simple risks. Basically, there are so many manufacturing units defined in fire insurance. There are 2,500 approximate occupancy are defined. So to define any kind of manufacturing occupancy, insured need to basically share what are the raw material being used, what are the manufacturing process, and what are the finished products. So these three stages of manufacturing process, insured need to declare so that proper occupancy been defined, accepted by the insurance company, so that no ambiguity can be happen at the time of taking claim. What happened in engineering workshop? There are so many subcategories. So it is a very wider occupancy in case of engineering workshop. So in that case, insured need to define what are the raw material they are using, what are the manufacturing process they are doing, and what are the final products they are making. If they declare those in sequence, then insurance company or risk engineer can identify what the exact occupancies that insurance company has, and if it is written in the face of policy, so insured is safe in any matter. So this is basically we advise from as a broking fraternity. Location of risks. Location is important because it can define the social radars, geographical hazard, and earthquake zone. Earthquake zone in India is divided in 4 parts, so it is important to disclose the location so that the proper earthquake rating should be applied. Past claim record is also important. Frequency of loss. If occupancy is defined, the insurance company can ascertain what are the frequency of loss, and in that case, the insurance company can give additional discount if there is less frequency of loss. And this is the latest amendment we need to know uh, in 2020. What happened with the 1st January 2020, the IIB has formulated a rate. IIB is basically Indian Insurance Bureau. Indian Insurance Bureau is basically uh, an organization under the Ministry of Revenue and Finance Department. This is basically advise RDA and insurance company what are the losses in the defined occupancy, and what are the global outcome, and what are the premium being charged, and what are the losses in the industry, entire industry. So all the insurance company basically give data to IIB, and IIB on those data is formulate his own rate on uh, 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 on burning cost analysis system. There is a burning cost system. Basically, there should be equivalent to premium charge and loss occur in that occupancy. So there is a occupancy wise burning rate concept accepted by IIB, and those IIB rates is now accepted by GIC. GIC is the basically mandatory body for reinsurance, the domestic reinsurance for all the insurance company. So all the insurance company has to basically reinsure their risk compulsory to the GIC. GIC is basically reinsurance company in India. So GIC has separated the IIB rates and directed all the insurance company to accept IIB rates only. There is no deviation uh, from the IBA rates allowed to any insurance company. So from 1st of January, all insurance company has to abide by the rates governed by released by the IIB. So from 1st January, it's basically now we come into the tariff regime. Is basically a kind of tariff regime. So again, the tariff regime is started from 1st January 2000. There is no additional discount is there. In that way, you can experience that most of the occupancies experience 2 times to 10 times increase in premium due to this circular only. And the earthquake and stay fire is governed by the IRDA only. In last time, 15 December 2018, IRDA has declared the earthquake and stay fire rate, so we need to follow that rate until the new rating is coming in by IRDA. Minimum rates of IR and mega risks is also tariff is governed by IRDA. In case of deletion of stay fire and earthquake, both premium price will be related to net cat rate. I stay fire applicable for the risk, equal applicable for the zone, which risk is situated. So basically, net cat rate has to be applied in case of deletion of stay fire. In IR policy, net cat perils are deletion of net cat perils is not allowed. Net cat perils means ST5. Deletion of ST5 is not allowed. And there is advantage in the NISCA laws. Coverage of add-on with sum insured up to 5 crores shall be granted free. Premium shall be charged full sum insured of all add-on covers above 5 crores. So up to 5 crores. So in case of this 5% omission to insure or 10% this escalation, you can cover the escalation of the property in advance up to 15%. So up to 5 crores, you can ask insurance company to cover at free of cost. So this is the advantage in this tariff region. Similarly, covers for omission to ensure escalation 5% of sum insured is free. Premium charge for full percentage cover sort is beyond 5%. अगर 5% ज़्यादा आप लोगे, then only insurance company will charge. So this is how fire insurance is being done in Indian market.
Shaiji, before going on the next part that's belong to the documentation requirement, I want
Right.
to know how we can just the coverage part. Suppose I have a factory, the cost of that factory which I incurred to establish this factory, build that factory, suppose for 5 crore rupees. But in
Right.
upcoming years, I can manufacturing goods and generate the profit of 15 crore, for example, in next 10 years. So
Mhm.
based upon what actually the coverage is decided and how we can ensure the adequacy of the coverage.
Actually, in insurance, there are two type of value is taken as a sum insured. One is restatement value,
Yes.
and second is market value.
Okay.
Restatement value means you need to estimate the cost of restatement of the same uh, asset just before the loss of the property. You need to estimate that. So
Okay.
in case of fire claim, uh, 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 the full value will be given by the insurance company at the time of claim if it is in the restatement value basis. But
Uh,
in case of market value, what happens? What I can see in Indian market, what insured does they go insurance by their book value. And after 10 years of some period of time, uh, uh, most of the commodities has a zero book value, but it has a value of use, it has a value of residue, so it has some value, but in books there is no value. So insurance cannot be done at book value. So what insured need to know, okay, what is the cost of procurement at the time of going for insurance, and then from that value, he need to deduct the depreciation for the period which is being utilized. So if it is utilized for 5 years, you need to deduct the depreciation for 5 years. If it is utilized for 10 years, they need to deduct depreciation for 10 years. But deduction should be done on the basis of current market value, not at the time of procurement of the asset.
okay.
So this is how insurance being done.
Shaiji, I have another question. Taking
Yeah, yeah, Sangam.
policy, suppose I am taking policy for 12 months. At the
Hmm.
time of obtaining policy, how the insurance company will determine that what will be the restated value? I mean to say that the suppose in case of fire in the future or damage through anything, how the future cost can be determined at the point of taking the insurance policy?
Simple. If some machinery is caught fire, it
Yeah,
is completely burned. Insurance
yeah.
company will ask, go to the market and give me a estimated invoice of that machinery.
But
And on the basis of that estimated
somehow
invoice,
insurance
insurance
premium
company
is,
will.
yeah, Shahidi, but
Uh,
somehow insurance premium is based upon the sum insured, and sum insured is the restatement of the same factory, and
hmm,
that will be determined when the fire will incurred. So how
hmm.
can be determined in advance?
Actually, what insured can do, they have FAR calculation in the system, fixed asset register they have. So
Okay.
every year they have a deletion of or addition of assets in their books.
Yes.
So on the basis of that, and procurement value is given, given at every stages. So depend on the procurement value, they need to add the current inflation every year. They need to add current inflation every year. So at the end of say if a factory is being insured after 10 years, so initial years what they have bought as an asset, they use the current inflation every year for 10 years. By this way, they can calculate the restatement value.
Okay.
So
Okay.
this is how we calculate RIV. So this is basically almost 99% correct.
Okay. So Shaiji, what you advise is, should we take insurance for the restatement, or should be on the cost basis we should take the insurance?
Restatement value is a better advice because in that case there is a minimal deduction in case of claim.
Okay. What you have said, adjustment
Minimal
value,
in that case restatement value. In case of
restatement
restatement value,
value.
there is a less chance of become insured as a under insurance.
Okay. Okay.
So, so it's advisable to go by restatement value.
Restatement value. Okay. So next point is, I think, fire insurance claim में
Fire insurance
document
claim. This is
required.
the document. Basically, what may people generally ask in the type of claims. What insurance company will ask and what insured need to prepare at the time of claim. So this is basically what being asked by the insurance company. Document required for fire claim is basically policy copy and all the endorsement issued till date at the till date of loss. 64 VB compliance. Basically, the amount should be reached to the insurance company before issuing a policy. So that need to be established by the insurance company. So insured need to have a certificate of 64 compliance from the insurance company, and then that certificate shall be given to the surveyor that this property is complies by 64 VB. 64 VB is nothing but a clause where insurance company need to issue policy by charging premium in advance. Then is survey report by the appointed surveyor. One thing I would like to clarify here: survey can be appointed by anyone, by insured or by insurance company, but claim can need to be given by the insurance company also. Can be given by insurance company. So, in a selection of a surveyor by insured, they need to have consent of insurance company. So, surveyor selection of surveyor basically is a flexible. Insured can also choose. Insurance company also choose. But if insured choose, then they need to have a consent of insurance company. Claim form duly signed by the insured with the claim bill. Fire brigade report. First information report of police means FIR. Meteorological report in case of act of God perils. Act of God peril means catastrophic loss, like flood in a storm, tempest, something like that. All cat perils. But it can be waived if it is a cat losses. Cat losses in that case, insurance company can establish by the media reporting or government reporting. Forensic report if it is applicable. So you can read out here in note ENF, the first information report and meteorological report. ENF shall be the first information report and fire brigade report. ENF report is clear and does not cause any doubt on the occurrence as well as extent of loss, and where it is not mandatory requirement of the state. Similarly, they can also waive where no report is made to the police or fire brigade in case of riot. Fire losses also were such occurrence in public knowledge. Production of police first information fire brigade report shall be waived. In this condition, the fire brigade report and first information can be waived by asking insurance company. The document shall be scrutinized to verify that loss has occurred within the period of insurance. What insurance company basically look at the time of claim? He need to establish loss has occurred within the period of insurance. Circumstances and cause of fire or damage fall within the scope of policy by insured perils. The loss should be happen by the insured perils only. The situation of the premise affected is covered under the policy. That address is uh, it is there mentioned in the policy or not. Construction and occupancies of building conforms to the policies. The construction occupancy, what is being declared at the time of insurance, should be established at the time of loss or loss as well. All condition warranties have been observed. If there is a condition and warranties made by insurance company at the time of issuance of policy, then all those conditions and warranties shall be observed by the insurance company at the time of loss. Right of recovery against third party who may be responsible for the loss has been occurred. If there is a third party liability is there, then insurance company asks for recovery from that third party. The assessment made by the surveyor is in order. The insurance company also double check what assessment been made by the surveyor. Insured has a insurer interest. Insurance company also need to establish that that insurance property has an insurer interest by the insured, and if that insurance is subject to bank loss payment, then claim will be paid to the bank. But if bank give NOC, then claim made to the insured directly in case of NOC by the bank or financial institution. No other insurance in force affect the property, and insurance company also need to know if there is also any other insurance is being run for that property or not. Second, payment of claim after verification of all aspect and claim whether survey report is clear as to cause extent of loss and liability under the policy is not in doubt. If there is no doubt, claim department put our internal claim note as per an access C. There is an access C. The claim department of the insurance company paper a note and give to the final or account department for the payment of loss. Generally, it is important to know what are the general overview of the settlement of claim. All the outstanding claims shall be reviewed periodically by HORO Claim Service Divisional Office branch for expedite disposable. There is an internal system of insurance company. Insurance company also liable if there is a delay in insurance. So it's not worried about the insured. Insurance company also worried insurance claim cannot be halt for unlimited period. You need to disposal all the claims uh, in the same financial year. Claims which are outstanding for over 2 years for want of details documents and there is no response from the claimant in spite of reminder, the file may be closed for no claim. So there is 2 years of time for saying no claims by the insured if there is documents pending and no response being uh, done by the insured. But that closure should be given by the registered post, and after 15 days of that registered post, it not be it will be considered as a no claim. All legal cases is settled in the consultation with head office and regional office. So if any legal office, the insurance company's head office will be directly come into the picture. This is all about my presentation.
Shahi, generally, with along with the fire insurance, loss of profit policy is also taken by the business houses. Can you put
Right.
some light over this? What is it?
This is basically consequential loss insurance. Consequential is a different different subject, entire different policies. What loss of profit is basically standing expenses. All the standing expenses can be covered as a consequential loss of fire policies. Standing expenses basically wages, rent or lease expenses or salary or your bank interest, any kind of those standing expenses can be covered, and that can be covered for a certain time period. If a insured can estimate that their factory will be reinstated in 6 months,
Yeah.
then they can cover it for 6 months. If factory can be reinstated for in 12 months, okay, then loss of profit can be covered for 1 year. So from 6 months to 3 years can be taken as a period of insurance in case of
Okay.
loss of profit insurance.
Okay. Shaji, have you seen any insurance company paid for LOP? Because I have never seen for the LOP part, especially because if you get the basic premium, basic claim or the
Actually,
damages, yeah,
Actually, what happened in case of loss of profit, fire material damage is need to be there. So fire losses need to be there. So first, fire losses need to be settled. If fire claim is settled, then only fire losses, evaluation of fire, the loss of profit of
loss of
insurance
profit
will
come
be
into the
taken care.
picture. Yeah.
That's why it's take longer period.
Yeah, Shaiji, I am saying from my personal experience that the issuance of claim for the fire is based that firstly we surrender our LOP, thereafter only they issue the claim of the fire basically. So
No,
in
no,
two and three
it
cases,
cannot be done. You can argue that it cannot cylinder. You can
yeah.
argue that.
One more
So
question I
Shahid,
want to ask you. Yeah,
Yeah, yeah.
Shahid, I will come in with next 1 minute.
Okay.
Shahid, many people have tendency to choose whether they should go for the private insurance company or they should go for the POC insurance company. So, can you put some light over it?
See, surveyor is basically independent to the insurance company and insured.
Yeah.
Surveyor will work for both a private company and a public company. So in that case, there is similarities. There is no difference in that. But handling of insurance claim document in private company is different, and government company is different. Government company is basically regulated by CAG. So file is basically rolling one department different department. But in case of private company, it is not like that. So if there is no a case of doubt, it is crystal clear of claim, then private company settle the claim faster than the public sector. But if there is a doubt, then the private sector is difficult to handle as compared to public sector.
Okay. Okay. Good, sir. And sir, we got one question from our participants, sir. What are the major reasons based upon that claim is rejected? So, can you give us 4 and 5 reasons, which are generally main reason in which for which the claim got rejected?
Uh,
I think one is the
Basically,
underinsurance. Am I right?
no, under insurance is different. Under insurance basically insurance company pay, but the claim amount is reduced. Insurance
Okay.
company pay is not rejected. It's insurance company pay, but the amount is reduced. So
Okay. Okay.
for rejection is there no point in rejection until there is come across of any conspiracy, or if a loss by any willing intention or malified intention by the of insured. In that case only.
Okay. Okay. So Chaudhary ji, you want to say something?
yeah, Shahid,
Yes, sir.
I think this fire policy is the basic policy on which other policies or add-on covers can be built up. If you want to take a burglary risk, so you can't take a standalone burglary risk. You have to
Okay.
take a fire policy. Am I right?
Right. Perfectly. You need to take you cannot take a fire burglary policy standalone. If you have a fire policy, then only you can take burglary policy.
Similarly, the loss of profit policy also you can take only
Also,
when there is
also,
a fire
if there is a
policy.
fire policy, right?
And now this fire policy, though name is fire, but it is not
Yes.
only fire,
Yes.
it is
Mm,
a number of perils which are covered.
right.
I think its name should be changed, sir. Now, IID should change its name because fire sometimes misguide the insurers also. That fire mean fire only,
basically,
but it incur many things.
basically, the full name of fire policy is fire and special peril policy. It's not fire policy. Fire and
Okay.
special peril policy. So it's
Okay.
a fire and few special perils are covered in this policy. It is name peril. So fire
Okay.
policy is a name peril. It's not all
Now,
this policy. It's a name peril policy.
now this the industrial unit, should they take industrial all risk policy or a fire policy?
It's depend upon the exposure of industry. Basically, IRA is allowed if asset value is more than 1,000 crore, then only IR policy is allowed. And what happened in IR, MBD is compulsory cover, machinery breakdown. Machinery, machine breakdown is a costly cover. If you can buy separate MBD cover with a fire policy, you can choose the machinery. Critical machinery you can choose. In MBD, selection is allowed. You can choose the critical machinery and you can go for the insurance for machinery breakdown for the critical machinery only. And there is no need of having a criticality of that machinery. You can opt out for of the insurance. But in case of IR, selection is not allowed. All machinery need to have machinery background. This is basically basic difference of IR policies and fire policy. So my advice, since if a factory is of asset more than 1,000 crore, it is better to go IR policy. But also in IR policy, the excess is very high. It's more than 5 lakhs nowadays. The excess is 5 lakhs. So, so if a factory is in a good shape and there is a lot of critical machinery is running in the factory, then IR is advantage. Otherwise, go by the fire policy and MBD policy separately.
Then this valuation for the purpose of insurance is also a very critical issue.
Right.
So how the valuation of land and building and plant and machinery should be done by the, because normally it is to be done by the chartered accountants or the accounts people in the company. So what can be the thumb rule for doing it? Because nobody is doing it on a professional, they are not going to a valuer or somebody. So they normally insure as it is. And if there is a under insurance, then there is a problem. If it is over insurance, then you have pay the excess premium.
Yeah, you're paying excess premium. Absolutely.
So for stocks, there is no problem because current market value is known.
Yes.
But for land and machinery and building, what should be the valuation? But that restatement cost, how one should calculate?
Sir, for the insurance purpose, there is no need to establish the valuation of land. But for your asset, is need to establish. But I said for any insurance, it depend upon the registration value or market value basis. So the insured account department need to establish what is the current value of the asset as per the FAR they have in their books. So every year they need to add inflations, inflation in their procurement cost, and need to establish the current market value by adding inflation only. So there is a RBI index in that. RBI has basically given an index, and they release every year for these commodities. These index need to fix for this kind of occupancies or commodities. So applying those indexes as inflation for different kind of assets, we can establish the return value or market value.
Okay. Over to Sangam.
Yeah.
Okay. So, sir, thank you very much, Shahid ji and J.K. Chaudhary, sir. Provide me insight on this topic, because somehow we fail to understand the basic knowledge of insurance. Generally, we just call the broker and insurance company and get the insurance. But until unless we have a depth knowledge of the things what we are going to take, because it will definitely help later on when the claim will come and the negotiation of the premium also. So it is always on the beneficial part that we have a basic knowledge of the things. Hope today's session will definitely help our participant to having the basic knowledge about fire insurance and some claim management tips. We have also discussed the documentation part. Whenever any claim, we should keep the documentation in advance so that we can also help insurance company in a best possible manner. My personal experience shows that we should provide each and every document in a very detailed manner to the insurance company, so the insurance company can determine their claim amount in a best possible manner, because somehow insurance company is the outsider and you know the better about your accounts, bills and everything. So somehow it is duty of the insured to provide correct information at the time of taking insurance and at the time of obtaining the claim amount. Because I also feel that sometimes surveyor and insurance company are the outsiders and they just believe on whatever you said and you not provide the documentary part. And when the claim amount will settle, you will surprised to see that something are not in your favor. So it's my humble request to all the participants to keep into consideration whenever claims comes, to totally try to make understand the surveyor and the insurance company each and everything, not just in the verbal communication. Try to provide things in a recorded manner, because it might be you need such kind of record in the later stage also when you have to go to the ombudsman. Because generally I found that if insurance for the X amount, generally insurance company not approve the X amount. Generally they approve the lesser than X. So in that case, sometime we need to go the ombudsman also. So that time the recorded documentation which you have provided to the insurance company during claim I express our sincere thanks to CA JK Chaudhary ji, who give as a resource person, Mr. Shahid Ali,
It was
to
most helpful.
discuss on this topic. And thanks to our learned speaker, Mr. Shahid Ali, to discuss about the fire insurance and make us aware so that we can do service to the society in a best possible manner. With this note,
Yeah, anytime.
yeah, thank you very much to all.
Thank you.
Thank you very much, sir. Now
Thank
we are
you.
signing off. Thank you very much.
Thank you.